Hi, my name is Paul Kaczynski, and I'm going to talk to you about ethics and unethical dilemmas in the workplace, and specifically in the accounting field. Individuals in the accounting profession have a considerable responsibility to the general public. Accountants provide information about companies that allow the public to make investment decisions for retirement, a child's education, and major purchases such as a home purchase. For the public to rely on information provided, there must be a level of confidence and knowledge in the behavior of accountants. Ethical behavior is necessary in the accounting profession to prevent fraudulent activities and to gain the public trust. There are many examples of unethical behavior in the accounting field, but one very common example is the misappropriation or improper recording of revenue. One such example is, say, a company procures a contract on December 1st and it runs through an entire year till next December. One unethical thing that managers will do is record the revenue from the entire contract into the end of the fiscal year in which the contract was procured. This means that the company saw 12 months of revenue recorded instead of 1 month of revenue, which is the proper way to go about recording the contract. This is done so managers can have their revenue seem higher than actually are and to receive benefits from these higher revenues. Unfortunately, this is a very common example, but to help curb the desire of this practice of aggressive accounting and ignoring generally accepted accounting principles, many organizations require accounting professionals to complete continuing professional ethics courses. In addition, a number of companies also have whistleblower hotlines, which essentially those are if you encounter or know of anyone performing these unethical practices, you can call them in and get them resolved anonymously. And this is what was done with Enron and many companies that underwent serious ethical issues. Fraud is committed based on through the fraud triangle, which the Association for Certified Fraud Examiners defines as a three-legged triangle which has pressure, opportunity, and rationalization as the three legs. The first leg, pressure, is what motivates the crime to happen in the first place. The second leg, opportunity, is the method in which the crime is committed. So the individual committing fraud must see the ability to abuse his position of power and trust. And the third and probably most important leg is rationalization, which is the justification a fraudster uses to, help himself or herself sleep at night. Many white-collar crimes, such as fraud in the accounting field, is done by first-time offenders, and they do not see themselves as criminals. Either they're down on their luck or went through some unfortunate circumstances, and they want to get out of the hole, so they resort to illegal or unethical practices. And once they do it once, they probably keep on doing it. So thank you for watching, and hopefully that was informative.